Accounting Standard as 5, revised 1997, net profit or loss for the period, prior period items and changes in accounting policies. Follow us on http://icis.blogspot.com and post your comments. This revised standard comes into effect in respect of accounting periods commencing on or after April 1, 1996 and is mandatory in nature. It is clarified that in respect of accounting periods commencing on a date prior to April 1, 1996, Accounting Standard 5802 originally issued in November 1982 and subsequently made mandatory will apply. Objective. The objective of this statement is to prescribe the classification and disclosure of certain items in the statement of profit and loss so that all enterprises prepare and present such a statement on a uniform basis. This enhances the comparability of the financial statements of an enterprise over time and with the financial statements of other enterprises. Accordingly, this statement requires the classification and disclosure of extraordinary and prior period items and the disclosure of certain items within profit or loss from ordinary activities. It also specifies the accounting treatment for changes in accounting estimates and the disclosures to be made in the financial statements regarding changes in accounting policies. Scope. Para 1. This statement should be applied by an enterprise in presenting profit or loss from ordinary activities, extraordinary items and prior period items in the statement of profit and loss, in accounting for changes in accounting estimates and in disclosure of changes in accounting policies. Para 2. This statement deals with, among other matters, the disclosure of certain items of net profit or loss for the period. These disclosures are made in addition to any other disclosures required by other accounting standards. Para 3. This statement does not deal with the tax implications of extraordinary items, prior period items, changes in accounting estimates, and changes in accounting policies, for which appropriate adjustments will have to be made depending on the circumstances. Definitions. Para 4. The following terms are used in this statement with the meanings specified. Ordinary activities are any activities which are undertaken by an enterprise as part of its business and such related activities in which the enterprise engages in furtherance of, incidental to, or arising from these activities. Extraordinary items are income or expenses that arise from events or transactions that are clearly distinct from the ordinary activities of the enterprise and, therefore, are not expected to recur frequently or regularly. Prior period items are income or expenses which arise in the current period as a result of errors or omissions in the preparation of the financial statements of one or more prior periods. Accounting policies are the specific accounting principles and the methods of applying those principles adopted by an enterprise in the preparation and presentation of financial statements. Meaning of net profit or loss for the period. Para 5. All items of income and expense which are recognized in a period should be included in the determination of net profit or loss for the period, unless an accounting standard requires or permits otherwise. Para 6. Normally, all items of income and expense which are recognized in a period are included in the determination of the net profit or loss for the period. This includes extraordinary items and the effects of changes in accounting estimates. Para 7. The net profit or loss for the period comprises the following components, each of which should be disclosed on the face of the statement of profit and loss. A. Profit or loss from ordinary activities, and B. Extraordinary items. Meaning of extraordinary items. Para 8. Extraordinary items should be disclosed in the statement of profit and loss as a part of net profit or loss for the period. The nature and the amount of each extraordinary item should be separately disclosed in the statement of profit and loss in a manner that its impact on current profit or loss can be perceived. Para 9. Virtually all items of income and expense included in the determination of net profit or loss for the period arise in the course of the ordinary activities of the enterprise. Therefore, only on rare occasions does an event or transaction give rise to an extraordinary item. Para 10. Whether an event or transaction is clearly distinct from the ordinary activities of the enterprise is determined by the nature of the event or transaction in relation to the business ordinarily carried on by the enterprise, rather than by the frequency with which such events are expected to occur. Therefore, an event or transaction may be extraordinary for one enterprise but not so for another enterprise because of the differences between their respective ordinary activities. For example, losses sustained as a result of an earthquake may qualify as an extraordinary item for many enterprises. However, claims from policyholders arising from an earthquake do not qualify as an extraordinary item for an insurance enterprise that insures against such risks. Para 11. Examples of events or transactions that generally give rise to extraordinary items for most enterprises are attachment of property of the enterprise or an earthquake. Profit or loss from ordinary activities. Para 12. When items of income and expense within profit or loss from ordinary activities are of such size, nature, or incidence that their disclosure is relevant to explain the performance of the enterprise for the period, the nature and amount of such items should be disclosed separately. Para 13. Although the items of income and expense described in paragraph 12 are not extraordinary items, the nature and amount of such items may be relevant to users of financial statements in understanding the financial position and performance of an enterprise and in making projections about financial position and performance. Disclosure of such information is sometimes made in the notes to the financial statements. Para 14. Circumstances which may give rise to the separate disclosure of items of income and expense in accordance with paragraph 12 include a. The write-down of inventories to net realizable value as well as the reversal of such write-downs, b. Restructuring of the activities of an enterprise in the reversal of any provisions for the costs of restructuring, c. Disposals of items of fixed assets, d. Disposals of long-term investments, e. Legislative changes having retrospective application, f. Litigation settlements, and g. Other reversals of provision.